All right. Friday, February 6th, day after the big implosion. I guess the story of the morning is Amazon earnings. I didn't really even look at them, whether they were good, bad, or indifferent. I assume they were probably fine. I think the market just wanted a reason or needs a reason to kind of sell these stocks. Currently trading at 204. It closed at 222, so it was down another $20 plus. $18, I guess, pre-market. It's showing about 8% down. So that's kind of the story there. A little aftermath on Google. I had bought Google yesterday. Late in the day, Google rallied back. And it's down a little bit today. But I stepped in and I bought some. I bought some stock and I bought two small lots. Two small 10 lots. And that's how I'm going to play. I don't have any Google in my account at all. I have a ton of options in Google. And I bought some more. I bought the 300. What the hell did I do? Bought the 320, 325, and I went out to December. And you can see both of my positions here in Google are actually holding up okay. What I do like today, too, is another add-on trade in the Goog. And I like the fact that it's actually down today. I like selling the 310, 300 put spread here. If I could do it I hopefully can do it for a little bit better than 250. It's about a 63% pop. This is what it looks like on the curve. You can see I have my holy tons of 10 shares here on here. I like this trade because of a couple of reasons. Obviously volatility in here is not extremely high, but for Google that's elevated. If you look at it on a volatility scale, if I can do that, I don't know what happened to this chart, why it's even doing that. What the hell is that all about? What the hell is that? I don't even know what's going on with this. Why is that? Another tasty trade fun here with the platform as usual, right? Just always something. Anyway, needless to say, I'm selling a little volatility. I'm getting about 3 deltas. So it is a bullish trade. I mean, I don't know. I think selling out of the money put or call spreads, although they are considered bullish trades, they're really not, folks. They're more neutral. I would say more neutral to bullish because if I was truly looking for a bullish trade in Google and selling puts, I'd be up near the money, right? I'd be selling the 325s or even the 330s and going out of the money a bit on them. The fact that the delta here is today, it's probably going to be even a little higher, but there are 30 delta tells me it's not really it's not uberly bullish because I am giving myself some downside here that if it does decide to either do nothing or even go down, maybe not get killed, I'm still in the dance, so to speak. So I like that trade here on the Googs, and I'm likely going to do that one today. Got to see how the price discovers, though. I'd likely believe you'd be able to sell this for a little bit more than $250 today because it's down about $3, $4 pre-market. So we'll take a look at that today in the Googs. Now, as far as Amazon is concerned, I'm not going to if I can put the symbol in right. Volatility in here is extremely high. There is going to be a bit of deflation today with it. I kind of like a fairly similar trade here in Amazon as the Goog, and I would like to sell about a 30 delta. And I'm assuming that when this opens, the 30 delta is going to be around 180 or so, or 175 is what I believe it's going to be. Again, I have to extrapolate. This is one of the issues that I have in general with option pricing. You know, today's day and age, folks, and the advent of technology, I don't want to hear that, oh, you know, they can't do that and blah, 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 we can't because of the... Shut the fuck up. Shut up. You don't know, you don't have any idea. This is the last bastion. Unfortunately, the option market is the last bastion of hope for the scumbags. You know, let's face it, for price discovery. And that's the reason why they do it. And, you know, and eventually it's going to go away. Eventually you're going to get 24-hour pricing on options. Those days are coming. So, yeah. I'm just actually looking for my... I don't have my screen brush. I have to have my screen brush because I always look to point stuff out and then it's not there. So there's the screen brush. Gotta love screen brush, man. It's so nice. You can highlight. You know what I mean? You can do remote. It's actually a pretty cool tool. Pretty cool. Very cool. So anyway, I'm looking at around the 180 likely, either the 180 or 185. And based on the price here, I kind of like the 185. And you can see here that, you know, looking at the bids up and down here, these are a mess, right? So I can't even really do the trade or show the trade because it's not gonna be priced right. But that's what I'd be looking to do today on Amazon as like a post-earnings trade would be to sell either a 185 or a 180, likely a 185. I mean, it looks like it's at 205 here, so about 20. But so basically, the thing is about $20 is what I'm looking for to sell some puts here in Amazon. And I'm going out to April. I'm not doing March. I'm skipping. I'm going out to April. I want to get myself, even though there is a little bit more implied volatility in March, you know, quite a significant amount, you know, and more so February. I do like April better. I do like that time factor. And so that's what I'm going to be looking to do there in Amazon. And that's probably about it as far as doing things. I don't, it's not going to show up. That was really about it. I mean, look, just like everybody else, folks, I'm not going to hide my head at all. I'm getting the snot beat out of me in a lot of shit that everybody else is. Look, I got Palantir. I got Broadcom. I got Mongo. I got Tesla. All right, Microsoft, I'm taking a fucking ass whooping. Netflix, I've chronicled my problems with Netflix quite openly and honestly. So look, we're all going through it, and don't listen to these fucking assholes on social media and out there and with their podcasts and everything else. And they're all saying, oh, well, I had puts and yeah, all right. So you had puts, and so are you still in them? And are you going to cash out? And are you going to, because at what point, like, again, I don't know if it's going to happen. I'm going to tell everyone right up front here today, I don't like the fact that pre-market we're up. I don't like it. I don't like it at all. I mean, to me, it looks and feels like there's going to be another leg down. Now, because we're opening up. And usually when we open up like this, they normally sell into it, especially when there's been a sell. Now, I don't. Now, the one thing that may not prove to be is the dollar's getting hit a bit today. So the dollar is down, and so that may actually keep a little bit of a floor underneath the market that the dollar is down. And bonds really haven't moved much this morning. And the VIX is kind of contracting a little bit. I think the VIX actually hit yesterday. Yeah, it did get up to about 22. So it's down quite a bit today. So, I mean, those things may keep a floor under the market. Now, the biggest mover and the biggest bounce is coming from the Russell. And I'm overall generally bullish on the Russell as a whole compared to all the other indexes, quite honestly. And again, it's from what I've been trying to say all year is I like the fact that it's a broader index. There's a lot of these AI-related both energy companies and plays that are in that space. And I think the NASDAQ as a whole, and we're seeing it, is that the big NASDAQ, because let's face it, it is there's some big, large stocks in there. I think the NASDAQ as a whole is going to have some problems this year. I don't think we see those massive gains. That's not to say that you're not going to have some things in the NASDAQ that do very well. But I don't think it's going to be the things that have driven us to where we are today. I still think the biggest growth potential out there is in the energy names, this year. And I also believe that biotech and related are going to be very explosive this year. And so that's kind of, my shtick, so to speak, with that. So that's kind of where we're at. Looking at the index, I did not do any trades yesterday at all. I didn't like the price action. I'm glad I didn't do anything because nothing really reacted very well for how I trade. I did not see anything respect the pivots. And when I don't see that happening, I kind of sit on the sidelines because that tells me that there's nobody really in control at that point. It's literally market. The market is reacting emotionally and not rationally. And so that was kind of what was going on. And I usually stay out of those trades. I'm still going to stick to the thesis that I think if you are going to trade these markets, and this holds true for every market, equity market at least, Russell, NASDAQ, ES, you have to stay on the edges. And what I mean by staying on the edges, you want to stay out of these middle range trades, which specifically, if you're talking about range bound, S1, R1, stay out of that spot. It is the chop zone. And unless you're just going to go take a flyer, and look, you can do that. There's nothing wrong with that. Just know your risk. Unless you're going to go you're not going to get any real setups in there going forward until things kind of cool off, until we still see the VIX come back down to 19, 18. That's going to be the play. So I'm marking again R2, 67, 47, 90 on the Russell, and S2, which is 25, 60, 30. All right, and that is pretty much it. R3 looks pretty interesting as well, but that's a big move That basically erases everything that we've gone through the last couple of days. Would I like that to happen? Sure. Why not? It's always good when the market goes up. Let's face it. I'm not going to deny that. I'm not one to sit and cheer for the demise of the stock market just so I can make money and make me right. I'm basically long, so I have no problem with it. Actually, it doesn't matter where it goes. Honestly, for me, I feel like I'm in a good spot no matter what. It's just, look, do I want to go up? Help, of course. I'm not going to be an idiot and say no, but anyway, I think that's that's a big move, and you notice though if you actually start stacking these pivots going back, and I could do that. I just don't really want to do that yet. Let me just expand this just so that. But if you start stacking these pivots back, you'll see over the last few days that these pivots have really widened. The breadth in here is really wide. If we're going to look at S3 is all the way down here at 25.33. That's a big move. Anyway, so that's the Russell. That's the story. And those are the spots I'm going to be dealing with today. I highly doubt I take an S3. If we really fall down there, it's kind of unlikely that will be a support area. They may very well just slice right through that like it doesn't even exist at that point. And so, same thing with the NASDAQ, right? Stay out of the chop zone. Again, this looks really interesting because, look, you have all these spots here. Again, the market always looks to do the most damage where people don't think there's the damage, right? And to me, it's like if you're going to trade this area in here, you're going to get sliced apart. Where R2 on the NASDAQ looks really good today. Because a couple of reasons. It's outside of the range that we were trying to fight through just a couple of days ago and get new highs. We couldn't. And, it's kind of like a relief area where, it will get through all this garbage and kind of clean these people off and then turn around. So I do like R2 up here, 25,213 on the NASDAQ, as well as S2, right? Perfect bounce yesterday off S2. Like you couldn't even chart this up any better. But, again, it's still in play. Because it was tested but not broken. All right, and then also R3 looks very good, but that's a big move. And again, same thesis as the Russell. If we're going to go test our S3 today in the NASDAQ, I'm going to pack my shit up and go home. I'm not going to sit and deal with it because to me, it would be game over at that point for the day and wrap it up, go have a good weekend. So that is the story there in the markets. ES, same thing. You can pretty much mark the same sort of things here with that. I have some, I don't know why I have these lines on here, but I put them up here. I forgot why, but they're there. But yesterday too on the ES, like perfect bounce off S2. 67.54.25. Like you can't even script this any better. R2 also ES. If you're trading ES, also very good spot today. And so and then you can't be complete without throwing gold up there. Gold, big. Everyone knows about the big, massive sell-off, but nonetheless, we have, I believe, hit a little bit of a recovery, and I'm probably going to jinx myself now by saying that, but you kind of have, a couple of things brewing here now with gold, right? And then, everyone has different signals, but, how many holds of, interim new lows, like, higher new low, right? Like, we have stair step, is it 3? Is it how many of these, right? Do you go through that, shows the trend change? I don't know. Everyone has a different philosophy. But from what I see here is I see a market that's a little bit on the mend, so to speak. So, I don't know if that's the case, but, hey, last couple of days have actually proved that, we are fighting our way back a bit in gold. Still think that the play is in copper. Copper doesn't look as sexy as gold, but a lot of the same characteristics. Again, like, a low, another low. Again, it's not huge, but another new low. Have we actually like stabilized here a little bit? And I put this line here the other day as kind of like a marker trying to find something back here, right? To find some semblance of a bottom, perhaps. And it appears as we trade now, today, that we are kind of respecting that. Even though we did have 2 instances of this slicing through, we are building a little bit of a base here. We'll see what happens, but I still think copper is the play in the metals going forward. Throw up natural gas. Natural gas has been an absolute nut house. It's been up, it's been down. I'm short natural gas right now. So, I'm looking for it. I think it's kind of 'tis the season to be short natural gas. I don't really have anything more to say about that. And I'm still looking for that 68, 69, even 70 handle in crude oil. It hasn't been a clean move, but again, it does appear that, a market that is on the mend a bit from a big move down. And so we'll continue to hold that, and I will continue to stay long as we stay above, the 60, 62 level. I'm targeting up here. I have it up here, $68. I don't know if it's going to happen, but I'm targeting $68. And that's the story there. And so that's kind of the world in commodities as far as I'm concerned. Now, as far as some of these other stocks, look, folks, I don't jump around to like 90 different stocks. I don't try and look for what's hot, what's not. I have my lists and I stick to them, and I pretty much trade those stocks. All these AI kind of plays right now, they're I'm not going to sugarcoat it. They're fucking a tough trade right now. I mean, seeing that they've given back what they've given back, unless we really see the bigger tech names turn around. I'm not talking software either. I'm talking like, I'm talking like the hardcore tech plays. You're not even just semis, but overall the hardcore tech plays. Unless those really kind of turn around and start going the other way, these are going to have a rough go of it. They really are. And, a lot of these look absolutely terrible when I start looking at these on a chart, and outside of trying to be as objective as possible. And I'm going to look at it daily on these. Trying to be as objective as possible on a lot of these stocks. It's hard for me to go in and, say, oh yeah, this is the spot to buy. Because when I look at this, I say, these have more room to go. I think, to the downside. I mean, there really is no floor to a lot of these, because they haven't been around. I mean, and that's kind of the issue is they just haven't been. They don't have the history. Like I can't look back and say like, oh, how did they do back in 2002 when we had the meltdown? In 22 when we had a meltdown, or back in, I'm not even going to say last April because everything melted down in last April. But even before that, what happened in 23 when things melted down? Like you just don't have this. And so I'm just being candid. This is a rough trade for me to step in on these and say, yeah, I'm going to get, because you're not going to get because to me, you're not going to get bearish on them and do a bearish trade unless you get an upswing, like a decent upswing, and you're going to short into it. Yeah, maybe okay. Yeah. But otherwise, like you're not getting long. Like to me, that's a rough. I don't know. I'll look at NBIS. That's one I've been trading. I trade quite a bit, and I've done pretty well with it this year. Actually, last year, did pretty well. I only did a handful of trades. I didn't do that many. Good volatility numbers. And then I look at the chart and I try and say, all right, so if I'm going to get long NBIS, I guess this is the time to do it. It filled the gap, like all the technical crap that you're going to hear, chart painters say. It filled the gap. There's a high volume node down here, right? You have this high area of volume down here, right? A lot of it's green, so there were buyers in here last time. But, underneath that, like, there's a massive hole in here that if it doesn't hold here, like, this thing could fall to 52 pretty damn quick as it went to 130 or 140, it can be at 52. And so anyway, I'm trying to look at it and look at all of these objectively as I can. This happens to have earnings next week. So that's going to be an influence on it as well for trading. And so, what do you do? So I come in and I start looking and I say, all right, well, if 52 is my floor, if I do something in there, and let's say I do go to, into March, and I think 52 is the floor. So I sell a 50 put. And, it's up $5 today. So they are bouncing, but I don't know if their dead cat bounces in here. Let me see. The margins. Let me check the margins in here. I mean, the margins are good. I mean, I guess that isn't a bad play. Now, I'm not going to do this today because it's up $5, because that would just be, that would be stupid. I think if I was going to do anything today and something like NBIS, I would probably sell some calls. I kind of like, let's see, if we sold 100, let's see if we did a 10 wide. Yeah, I'd likely sell 100 call on this if I was going to do something. Anyway, I'm trying to look at these objectively, and I'm trying to find trades that aren't going to, run me over, because I'll be candid. Fundamentally and looking at it, like, yeah, volatility's high in this, right? The 50s don't look like they're out of the question, but the way these have moved, and to see that this thing could be 50, and what I'm thinking is like a comfort move and being short 50 or 55 puts could quickly put me in a position where I'm pressed. And that I have an issue with. Look, I get it. I get that, no risk, no return, all that bullshit. I get it. But given with what market's doing right now, do I really want to put myself into that situation? I don't know. I don't think so. So what I'm getting at is I think the best trades in these so-called AI plays, I think they are the net neutral volatility plays but with caution, and with the caution that a lot of the volatility in these stocks really just hasn't even gotten deflated when you would think it did. And so the volatility plays in general, and I guess what I'm getting at, volatility plays in these stocks overall just haven't really panned out as well as I would have thought. And so I guess the moral of the story is just be careful with these, because, unless you're willing to, if you're going to sell anything in here and do it naked, just be willing to accept that, you may get assigned just because of the way these things are moving right now. And that was it. I mean, and it holds true with all of them. It's not just, I'm just using NBIS as an example because that's the one I've traded the most. But even the URA, which is the ETF, the uranium ETF, I actually bought this and went long. And I'm sitting on a covered call. And the reason I went covered call because I really didn't want to buy it where it was. I think my cost on it when I bought it, I think it was like $56. It's $50 now. But I did it because I just didn't feel like it was going to go. I kind of knew it was going to go down when I bought it. As crazy as it is, and that's why I decided to do the cover call. And I'm glad I did the covered call because now I've since rolled that option twice, brought in money, and my cost basis now is about $51 on the URA, which, again, that turned out. So there's another strategy possibly. If you're looking to buy it, do a covered call, because if it does have another leg down, at least you have, it's going to limit your upside, and you're just going to have to swallow that like a man and not be a pussy about it. Look, it happens. I know so many people are like, oh, well, I sold this covered call and, and the stock went up. And, well, you wouldn't be fucking bitching about it if the stock tanked and then you rolled it again and then it went up. So shut up. It's something you do. It's a strategy. You made money, so shut up. And then if you're really that upset about it, that you sold it and it went up, then sell a put. Sell an in the money put at what you sold the call for. And then if you get assigned, then you'll own the stock. Shut up. But it happens with covered calls. So anyway, that's it. That was kind of my spiel today. I don't think we're going to, I don't think I'm going to be doing much today. I think I'm going to be sitting on my hands a lot. I'm going to do a couple things. Like I said, I'm going to do the Amazon trade. I kind of like that here. Don't like the fact that it's bounced a little bit since the open, but it is what it is.